Welcome to News Edge, your sharpest source for daily headlines and deep dives. If you're new here, don't forget to hit that subscribe button and stay ahead of the curve. Something is quietly shifting among America's wealthiest. Behind closed doors, billionaires are selling off U.S. assets, stocks, bonds, even real estate. There are no headlines, no press conferences, just a silent retreat. When those with the most to lose start moving their money, it's a signal worth noticing. This isn't about one billionaire making a move, it's a pattern. A small, powerful group is reducing exposure to the U.S. economy. They're not just protecting wealth, they're anticipating a storm. Why now? These are people who built fortunes on American growth. Their pullback suggests they see real risk ahead, something deeper than a routine downturn. The scale of their moves points to fears of a fundamental shift in the economic landscape. The ultra-rich have access to the best information and analysts. Their caution is a warning for everyone else. Most people rely on headlines and official reports, but the wealthy see the connections between global politics and their portfolios. They know how a single policy can send shockwaves through markets. The current sell-off is a message turbulence is coming. Confidence is the bedrock of any economy, and when it erodes at the top, cracks spread fast. What do they see that others don't? The average person is busy with daily life, but the ultra-wealthy are already preparing. Their actions are a forecast, not a reaction. This is a signal we can't afford to ignore. The question isn't if change is coming, but how soon. The warning is clear. Pay attention to what the top is doing. Let's break down tariffs, a simple word with big consequences. A tariff is a tax on imported goods, making foreign products more expensive. The idea is to protect domestic industries, but the reality is far more complex. Right now, tariffs are back in the spotlight because of the threat of sweeping new ones. Former President Trump has promised broad tariffs if re-elected, potentially on all imports. This would be a dramatic shift from decades of open markets. Such uncertainty rattles investors, especially the wealthy. Modern businesses rely on global supply chains. A smartphone or car is built from parts worldwide. Tariffs disrupt these networks, raising costs for companies and consumers. Higher prices mean inflation. Disrupted supply chains mean chaos. Billionaires don't just hear political promises, they see the risk of trade wars and broken supply chains. Retaliation from other countries would hurt U.S. exporters and workers. A trade war can slow the global economy, triggering a chain reaction. That's why the wealthiest are quietly moving assets to safer havens. Tariffs aren't just taxes, they're signals of instability. When the rich start to worry, it's time for everyone to pay attention. The stakes are higher than they seem. Financial markets are anxious about the possibility of a second Trump presidency. His first term saw aggressive tariffs and unpredictable trade policies creating volatility. Now, he's proposing a universal baseline tariff, potentially 10% on all imports. For investors, the real problem isn't just tariffs, but the uncertainty they create. Businesses need predictability to invest and hire. Uncertainty makes them hesitate. Even the threat of tariffs can slow the economy before they're enacted. The U.S. has long promoted free trade, but a sudden reversal would throw the system into chaos. Other countries would retaliate, hurting key American industries and jobs. Billionaires selling U.S. assets are betting on disruption. They see a shift toward economic nationalism and protectionism. The fear, slower growth, higher inflation, and a weaker stock market. By selling now, they're getting ahead of the storm. Their actions reflect deep concern about America's economic future. The message: turbulence is likely, and the wealthy are preparing. What are billionaires selling? First, stocks, especially in companies tied to global trade. Multinationals with complex supply chains are most at risk in a trade war. Next, U.S. government bonds, once the world's safest investment. But a slowing economy and rising debt make even these less attractive. Some are moving money into bonds from more stable countries. Real estate is also on the chopping block, not just luxury homes, but commercial properties. The value of offices and warehouses depends on a healthy economy and robust trade. If businesses struggle, demand for space drops. Some are even pulling out of private equity and venture capital funds focused on the U.S. These funds fuel innovation, but they're risky in a downturn. A recession makes it harder for new companies to survive. By reducing exposure, the wealthy signal doubts about America's near-term growth. They're choosing caution over risk. The sell-off is broad: stocks, bonds, real estate, and startups. It's a clear sign the top is bracing for trouble. It's tempting to think billionaire moves don't affect regular people, but they do. When the wealthy sell US assets, it triggers a domino effect. Stock prices fall, hurting millions with retirement savings in 401(k)s and pensions. A falling market creates fear, leading people to spend less. Less spending means businesses see sales drop, so they cut back too. This cycle slows the whole economy. Main Street businesses, restaurants, stores, depend on local spending. If factories lay off workers due to tariffs, those workers stop spending, hurting local shops. The billionaire who sold their stock is insulated, but small business owners and workers are not. When the rich pull money out, it can weaken the dollar. A weaker dollar makes imports more expensive, raising prices for everyone. This hidden inflation hits every family's budget. The quiet decisions of the wealthy ripple down to the gas pump and grocery store. The connection is real and painful. What happens at the top always finds its way to Main Street. The most damaging effect of a tariff-driven slowdown is on jobs. Higher costs and falling demand force businesses to freeze hiring or lay off workers. Young people and job seekers find fewer opportunities. If things worsen, layoffs spread, especially in manufacturing and agriculture. Retaliatory tariffs can devastate farmers and factory workers. The pain doesn't stop there, it ripples through local economies. When a factory closes, nearby diners, stores, and mechanics all lose business. This chain reaction leads to widespread unemployment. Billionaires see this coming. A trade war, then slowdown, then job losses. For families, losing a job is a personal crisis. For the nation, it's a potential catastrophe. Rising poverty and unrest can follow. Good jobs are the foundation of stability. Tariffs put that foundation at risk. The warning job losses could be just the beginning. When billionaires sell US assets, their money doesn't vanish, it moves. The question, where? They seek safe havens, countries and assets less exposed to US turmoil. Switzerland is a top choice, known for stability and a strong currency. Investors buy Swiss bonds, stocks, and park money in Swiss banks. Japan is another destination. The yen is a classic safe haven currency. Gold is also in demand, an age-old store of value in uncertain times. Wealthy investors are buying gold bars and financial products tied to gold. This global shift boosts markets in safe haven countries and strengthens their currencies. Meanwhile, the US sees weaker stocks and a falling dollar. The outflow is a vote of no confidence in America's near-term future. Capital is being redistributed globally. The world's financial elite are hedging against US risk. Their moves reshape markets far beyond America. The message money follows confidence, and confidence is leaving. What's next for the US economy? There are a few possible paths. The optimistic scenario tariff threats are mostly talk, and any new tariffs are limited. The global economy adjusts and the US avoids a major recession, a soft landing. The pessimistic scenario, broad tariffs trigger a trade war, chaos in supply chains, soaring prices, and a deep recession. The Federal Reserve might raise interest rates, making things worse. This is the hard landing billionaires fear. A third path, prolonged stagnation, low growth, persistent inflation, and high uncertainty. Businesses hesitate to invest, wages lag, and the stock market stalls. This stagflation erodes prosperity over years. The outcome depends on policy choices in the coming months. Will leaders choose confrontation or cooperation? The wealthy are preparing for the worst, not waiting to see what happens. Their actions are a stark warning. The stakes are high. The future of the American economy hangs in the balance. The next moves will shape the nation for years to come. For most people, this all feels overwhelming, but knowledge is power. Watch what political leaders say about trade and tariffs. Their tone signals future policy. Monitor prices at the store and gas pump. Rising costs can be an early warning. Pay attention to local job news, not just national stats. Are businesses hiring or cutting back? That's the real economic pulse. Economies run on confidence. If fear spreads, downturns can become self-fulfilling. Stay informed, engage in debate, and demand policies that promote stability for everyone. The actions of the wealthy are a symptom of lost confidence at the top. Don't ignore the warning signs. Stay alert, stay prepared, and push for a future that works for all, not just the few.